Real estate investing is a dynamic field, and among the strategies gaining significant attention is the BRRRR method. This approach, standing for buy, renovate, rent, refinance and repeat, offers investors a systematic way to build wealth through real estate. By understanding each step in the BRRRR process, investors can make informed decisions and maximize their returns. Now, let's take a look at each step in the process and see what each one entails. 1. Buy. This is the foundation of BRRRR. The first step is buying the right property. Investors aim to find properties that are undervalued or in need of renovation, typically targeting distressed properties, foreclosures, or homes sold below market value. Key considerations during the buying phase include location, potential for appreciation, and the property's condition. It is important that the home is below market value and with minimal renovation, will match the market value of similar properties in good condition. 2. Renovate. This is when you add value to the property. After acquiring the property, the focus shifts to rehabilitation or renovation. This phase involves making necessary repairs, upgrades, and cosmetic improvements to increase the property's value. Investors may need to work with contractors, architects, and designers to execute the renovation plan efficiently. The goal is to enhance the property's appeal and functionality while staying within budget constraints. 3. Rent. This is where you generate passive income. Once the property is renovated and ready for occupancy, the next step is to find tenants and start generating rental income. Investors must conduct thorough market research to determine competitive rental rates, attract qualified tenants, and manage lease agreements effectively. Rental income contributes to cash flow and helps offset expenses such as mortgage payments, property taxes, insurance, and maintenance costs. 4. Refinance. After the property is rented and generating income, you can leverage equity for growth by considering refinancing to leverage equity. Refinancing involves replacing the existing mortgage with a new loan, typically at better terms or higher loan-to-value ratios. By accessing the equity built through renovation and rental income, investors can free up capital for future investments or property improvements. 5. Repeat. The final step in the BRRRR method is repetition. Once the property is refinanced, investors can use the freed-up capital to repeat the process with additional properties. This iterative approach allows investors to scale their real estate portfolio, increase cash flow, and build long-term wealth. Successful implementation of the BRRRR method relies on disciplined execution, market knowledge, and strategic decision-making. One of the benefits of the BRRRR method is wealth creation. By adding value to properties and leveraging equity, investors can build substantial wealth over time. Another benefit is cash flow. Rental income provides a steady cash flow stream, improving financial stability and covering investment expenses. Portfolio diversification is also one of the advantages, as investing in multiple properties diversifies risk and enhances overall portfolio resilience. Also, forced appreciation is another benefit. Renovations and improvements can lead to increased property values, boosting equity and potential returns. You can also access tax benefits with this method. Real estate investors can benefit from tax advantages such as depreciation deductions, mortgage interest deductions, and capital gains tax treatment. However, while the BRRRR method offers numerous benefits, investors should also be aware of potential challenges and considerations. One of the considerations is market risks. Real estate markets can be cyclical, and economic factors may impact property values and rental demand. There may also be financing risks, as securing favorable financing terms for refinancing can be challenging, particularly during economic downturns or credit tightening. Another challenge is operational management. Managing rental properties requires time, effort, and expertise in areas such as tenant screening, property maintenance, and legal compliance. Lastly, you must also consider renovation costs, as renovation projects may encounter cost overruns or delays, affecting overall profitability and project timelines. In conclusion, the BRRRR method of real estate investing provides a structured framework for investors to acquire, improve, and leverage properties for long-term wealth creation. By mastering each step in the process and navigating potential challenges effectively, investors can unlock the full potential of real estate as a lucrative investment vehicle. Strategic planning, market analysis, and continuous learning are key to success in implementing the BRRRR method and achieving financial goals in real estate investing. Toast to your success!